Hello, everybody. Thank you so much for joining me today. For today's video, I want to cover some of these so-called Tesla killers that are showing a lot of weaknesses as of late. I want to cover some of the latest news around GM and some of the developments that are happening there. The broader economy is showing a lot of weaknesses, especially around the auto market. And I'll cover some EV news as well as we go through today's show or whatever we want to call this. But before we even go into that, a few seconds just to thank TJ, Quinn, and Rodney for becoming members by clicking on join right below this video. Thank you so much for your support and everything. We just hit 50,000 subscribers as well. So thank you all so much for your support. It's incredibly humbling. I can't even believe, I don't even know why y'all are here, but I really appreciate it. You get cool emojis when you become a member, and you get access to our private Discord and member only content on Fridays as well. So our first piece of news I want to get through. So from Sawyer Merritt, friend of the show, my main source of news around the EV world, Porsche confirmed that it will impose significant price increases on its models when it releases the new model year vehicles in the middle of 2023 in a bid to keep its profit margins as high as 20% in the long term. Beautiful car, lovely, lovely car. I've seen these in person. They're just absolutely gorgeous. But this is a very interesting decision that Porsche is doing to raise its prices. Why is that interesting? If you look at the Taycan today, if I just go to their, on the website to spec a car, the lowest trim car for the Taycan is $88,150 as of today's date, which is March 15th, I think, March 15th. And they're looking to increase these prices significantly. This car at a base has a 208-mile range and a 0 to 60 time of 5.1 seconds. Now, one would think that when a car maker is increasing prices, it's because they have a lot of demand, or they think that they're getting a lot of interest in the car, so they can raise the price. However, using Bing Chat, which by the way is using GPT-4 now, I don't know if you've been tracking that. I'm sure you have. According to the search results, Porsche delivered 34,801 all-electric cars in 2022, which includes the Taycan, which is 16% decrease year over year. The Porsche Taycan share out of the total volume amounted to 11.2% for all of Porsche. In 2021, the company sold 41,296 Taycans, which was 13.7% of the total volume. So we can see year over year, the volume for Porsche EVs is down, and Porsche is looking to increase their prices. I want to compare this car to its closest competitor, which I believe is going to be the Tesla Model S, all-electric car. A Tesla Model S starts at $90,000. It has a range of 405 miles and a 0 to 60 time of 3.1 seconds. And for that performance, you get a car that's only $2,000 more expensive, which has been coming down in price. So this Tesla killer that a lot of people have been hyping ever since its release, its sales are down and they're looking to increase price. Yet on the other side, you have Tesla who's increasing their volume, and their prices are coming down. It's very interesting. Real quick, again, here are the specs for the car. And so here's an example of a Tesla killer, so-called Tesla killer in the Porsche Taycan, that they have to make a change to how much the car costs to try and really justify having production open. Porsche needs to increase prices to justify production. I really think this is what's going on here. Otherwise, this move doesn't make a lot of sense. We have less sales, and so we're going to increase the price. Strange. Very, very weird. Another point that we covered on the tweet that Sawyer shared was that they're looking to do this, at least Porsche says, they're looking to do this to maintain margins as high as 20%. Yet if we compare them to their, again, closest competitor in Tesla, in Q4 2022, Tesla reported an all-in gross margin for all their cars of 25.9%. This includes all the models. So it includes their higher margin, higher price S and X, and it also includes the lower margin price Model 3, and in some cases, the Model Y. So from a full company perspective, Tesla has a much higher margin than Porsche, yet Porsche is looking to increase their prices on a lower volume basis to have lower margins than Tesla. Interesting. So something that was, I don't know, Tesla killer, is it really? I think we're starting to get some data that points to that not being the case. Incredible car, don't get me wrong, but the Tesla killer narrative and this competition narrative, I think, is really starting to just be completely killed. If you're enjoying the content so far, we'd love it if you throw me a like. The YouTube algorithm will show this to more people. If you do so, thank you so much. Really appreciate you. Real quick, I also want to go through this piece of news that was quite interesting yesterday against Sawyer. Tesla won a lawsuit against a famous car reviewer and TikTok celebrity in China known as Boss Kai, I believe that's how it's pronounced, for damaging Tesla's reputation by spreading false rumors. He will now have to apologize to Tesla publicly and keep the apology on TikTok, WeChat, and on Weibo. I think it's pronounced that way, social networks for at least 90 days and pay Tesla $14,500 USD in damages. Not a huge amount, but I think the messaging here is quite interesting. The Chinese government found this influencer from back in, I think, 5 years ago, in just doing wrongdoing in China, which I think is a very interesting, unexpected dynamic that could have arise from this whole situation. And this person is now is forced to have to give an apology, and so we'll probably hear from this here very shortly, within 90 days, according to the court case here, what they're asking the person to do. And this should also be a sort of deterrent for anybody else, at least in China, to use social media to try and smear Tesla's reputation or Tesla's name, which I think bodes very well for Tesla's long-term prospects in the country. There were some concerns about Tesla perhaps not performing well in China because of how they were being treated either by social media or the news networks. But now we have a deterrent, a very clear, hey, if you do this, the government, the court system will find you guilty, especially if you're spreading lies and whatever else, in which case they were. And so I think this is a very positive development for Tesla in that region. So yeah, just another very interesting thing to follow. In respects to GM here on the states, in the states side, the global chief marketing officer at GM retired as of yesterday's date. Deborah Wall, global marketing chief at General Motors, has elected to retire effective March 31st. We appreciate Deborah's contributions since joining GM in 2018 and wish her well in her next chapter, GM spokesman David Barnes said in a statement. We will conduct an external search for a new global chief marketing officer. The news was announced internally on Monday and confirmed publicly on Tuesday, he said. So here's a very interesting piece of news where very quickly after GM announced that they'll be doing voluntary layoffs where people can choose if they like to take a severance package for leaving, which broke on March 9th, which was about 6 days ago, we have news that really the head of marketing for GM Global has elected to retire. So it looks like there are changes starting to happen within the company that could just be related to people naturally leaving, or they might be looking for some sort of change in the marketing strategy with the company. And it's probably a sort of a combination of both in this case. So it's very interesting seeing these starting to develop. Another piece of news around GM, again, that might be potentially cause for concern is that GM extends production halt at Mexico truck plant over supply chain issue. This is as of yesterday's date. General Motors said on Tuesday its Silao assembly plant in Mexico that makes Chevrolet and GMC pickup trucks will extend a production halt through March 20th because of an undisclosed temporary supply chain issue. My favorite thing about this article is the Ford ad next to a GM article. Advertising. Amazing how that works, eh? But this is a very interesting piece of news. I had to make this joke. COVID called. It wants its supply chain challenges back. Come on, guys. It's 2023. I thought we were past this, right? Interesting piece of information here that GM still seems to be struggling with supply chain challenges around its manufacturing. Just a very interesting piece of information. This is in addition to the GM already pausing a full-size truck plant to maintain optimal inventory levels that was announced not too long ago. It was last week, I believe. And this shutdown starts on March 27th. So they're exiting a truck shutdown late. So they'll continue through the end of next week. And then quickly thereafter, the Fort Wayne plant, which again makes their most profitable vehicles in their pickup trucks, will start their shutdown. So another piece of development here on GM that, again, it's clear points. I think that there are clear things here that are pointing to a slowdown for Q1, not just for GM, but likely the entire auto market in the United States, save one or two brands. It's another thing to really keep your eyes on. In addition to that, you have the broader economy, which obviously is going to impact a lot of these things. People being able to afford vehicles, people being able to afford homes. In this channel, I mainly focus on the vehicle sector because that's what I'm most familiar with. Who knows, over time I might expand. But Unusual Wells on Twitter, a phenomenal account to follow if you really want news around the broader economy. Layoffs by U.S. companies over January and February touched the highest since 2009 per Reuters. So this is kind of a concerning tidbit, especially knowing that the Fed is trying to force some sort of economic slowdown because of inflation. However, it's important to keep in mind that these layoffs are primarily around one sector, in this case is tech, which experienced a huge boom since the COVID lockdowns. And so it might be healthy for that sector to happen, but getting that sort of headline is a little bit of a sort of flashback of what was a very difficult time in the United States from an economic perspective as well as globally. In addition to that, from a sort of economy perspective in the U.S., Zach Shefska, which is Zach and Ray from Car Edge, will be on my channel tomorrow to discuss a few things around the auto market. But this is a very interesting piece of information I want to get you caught up on. Nothing to see here. God, I love the sarcasm. Just 60-plus day delinquency rate by FICO score. 1 in 10 subprime borrowers are severely behind on their payments and likely significantly underwater on their loan. So let me walk you through what this chart really means in case you're not familiar and what this is describing. So FICO is really just, your credit score. When you go on Credit Karma or your banking app, that number, the 650, 700, 750, 600, wherever you are, that's your FICO score. And then the blue line are FICO scores of people that have car loans that are under 550 credit score. And then the percentage delinquencies that are above 60 days. So if you're 60 days delinquent or behind in paying your car loan, what percentage of that FICO score range is delinquent or behind on payments? The blue line is any credit score below 550. The yellow line is between 550 to 575. The green line is between 575 and 600. And the red line is 600 plus subprime. So basically anything that is considered subprime above 600, which is considered a riskier person to loan out to, basically. Think about it that way. And what's very concerning here is that the folks that have the lowest credit scores, 550 and between 550 and 575, have reached really all-time highs since 2012 in delinquencies of 60 days plus, especially for people that are below 550 FICO score, which points to a specific kind of trend, which is a significant percentage of the US population can't pay their bills in some way. 60 days delinquency is 2 months behind on car payments, and 10% of people with a FICO score below 550 are delinquent. Does that bode well for the car market? Think about it long term. Zach and Ray, father and son duo, his father has been a long-time dealership person. It's just a very, very knowledgeable person around the auto industry and the auto dealers. The question was asked, Zach, has your dad ever dealt with an economic climate like this? What happened back then if he has? Zach replied, never. This is different than 07, 08, so something to keep a very close eye on as we're thinking about how the economy is going to develop for the next few weeks and months, especially around the auto market and how this impacts companies like GM, Ford, Tesla, and everybody else. A very concerning piece of information. You have this within the backdrop of, I'm sure everybody and their mom has heard, Silicon Valley Bank over the weekend became a freaking meme, right? Signature Bank was another bank that failed. There's a bunch of noise around Credit Suisse, who's another bank, a European bank, who's had a lot of liquidity problems for the last year or so. That's a lot of rumors are that they're next to fail. So there's just a lot of instability in the economy, and you have all these other moving pieces around the auto sector. That's, for me, a huge cause for concern. I'm going to continue tracking these every single day to see how this plays out, because where there's smoke, there's fire usually. And I think there's a pretty big fire brewing here. I don't know where it goes, and I don't want to freak you out, but to me, it really does seem like there's something big going on here that's important to keep an eye on. Again, just a reminder, look at these wonderful, handsome gentlemen. The State of the Auto Industry with dealership veterans Ray and Zach of Car Edge tomorrow again at 1 p.m. Central. If you're interested in seeing that interview, please come back on this channel. We'll be discussing a lot of these things in detail around the car market. And I do want to get you caught up on some positive news so we don't leave this thing on a huge bummer. Kia has officially unveiled the production 2024 EV9 and all-electric three-row SUV. Whoops, excuse me. What am I doing here? I'm so bad at this. Specs will be revealed in early April. Kia says it will be on sale by the very end of 2023 or early 2024. Here are some pictures of the interior, the exterior. Here's a bigger picture of it. Pretty good looking car, honestly. I think this will do really, really well, especially in the United States. Here are some of the specs. These may change. I just grabbed this from the Twitter thread that was on. It looks to be official from some of the research I did. But the car will range between $56,000 to $73,000. Starting range of 220. Highest range is 290. Not a fast car. 0 to 60 in 8.5. Not the longest range, but it is a full seven-seater, which there is a lot of demand for that in the States. But unfortunately, it looks like it won't be eligible for the EV tax credit until Kia brings manufacturing onto the North American continent, which they probably will take a few years to get there, probably at least a couple of years. So these starting prices for the car will be the starting prices, and it won't be eligible for the EV tax credit in case you're interested in that car. And then lastly, there was an update to the moderate overlap front test for SUVs, where it was more strict around some of the safety things that the manufacturers are meant to do for these cars. And I really want to give a huge props to the Ford Mustang Mach-E for having a good rating across all these new categories. The runner-up was the Tesla Model Y, where it achieved good, except acceptable for rear passenger restraints and kinematics. So props to Ford, man. The Mach-E, I've been seeing it a lot on the roads as of late. I think it's a great car, and I'm hoping Ford can come to a place where they can sell these suckers as profitably as possible and as much as possible. So best of luck to Ford to make that happen. Real quick, if you want to support the channel, I'm wearing a shirt right now. It's blueberries. Those in the know will probably know what it refers to, and also have some shirts on the store description, link in the description below, as well as a coupon for my favorite supplement, Athletic Greens. You'll get free travel packs and free vitamin D if you do decide to go with this supplement as well. Thank you so much for stopping in. Really appreciate you. I hope this information was informative and valuable. I will be keeping a very close eye on the auto market, probably for the rest of the year, because there's a lot of cracks starting to show. And for those of you that follow me closely, you know that I'm a huge proponent for electric vehicles. I'm a Tesla investor. I have been invested in Tesla since 2012. I've worked at the company for over 4 years, but I don't want the economy to collapse, and I want everybody to succeed, okay? And especially when it comes to the auto market as well. And some of the cracks that are starting to show are very concerning to me, and I'll be doing my best to cover these as unbiasedly as possible, if that's even a word, to really just try to get you caught up on what's going on and what I'm seeing, and hopefully that's valuable to you. Thank you so much. We'll see you in the next one. Take it easy. Bye-bye.